What up, YouTube? I'm back with another video. I'm driving right now, so forgive me if I don't be looking at the camera that much, but I'm trying to stay focused on the road. Today's video, I want to talk about how to use your credit to buy a car the right way. A lot of people normally, they go to a bank, go to a credit union, and they get a car loan. They get it the traditional way. You get a car loan and you gotta pay it back 5 to 6 years, and you just pay a car note. If you default on the car loan, of course they come back and they can repossess the car. So I'm trying to show you a better way so you can go buying a car using your credit without getting your car repossessed if anything happened. Okay, so number one, make sure you got some good credit before you go buy a car. Make sure you build your credit, get your credit up before you go buy a car. When you go to the bank, which you need to go to a credit union, not a bank, because a credit union is going to give you the best interest rate overall, no matter what credit product you get. So the best thing to do is go to a credit union, and instead of getting a car loan, get a personal loan or get a personal line of credit. Now me, I would prefer a personal line of credit because you're not charged interest on only what you use. Personal loan, you charge on the whole amount until you pay it back. But let's just say you get a personal loan. Okay, if you get a personal loan, let's say you get a personal loan for $20,000, $30,000. It's an average car amount range. Or you get a personal loan for $30,000, and you take that personal loan and you go buy you a car cash with that money, and then you just continue to make the payments. Now the difference is, because you bought your car cash with the personal loan, if you ever default on the personal loan, they wouldn't repossess your car because you paid for it cash with the loan. They wouldn't even know what you used the money for, because it's a personal loan. You can use it for whatever you want, but you just used it to go buy a car. So if anything happened, let's say you use your job. If you lose your job, then you have a lot of different other options you can do, and you're in a better state. Then if you lose your job and then you can't make your payments for your car note, they're gonna repossess your car and put you even in a worse state than before you lost your job. Because you losing your job and then you losing your car, you can't even use your car to go find another job. And your credit messed up because you got a repossession on it. So instead of doing it that way, if you use a personal loan and you lose your job, yes, they can still default on the loan and put it on your credit, but you still have your car. At that point, you can still use your car to hurry up and go find a job so you don't default on the loan. Or you can take your car and you can go and sell your car, get the money back from you selling your car, because like I said, your car paid for, and you can use some of the money and continue to keep paying your payments. And then you can use some of the money to go buy you a car cash, like a cheaper car. Say if you got a $30,000 car, and let's say you sell it and they give you $27,000 or whatever it depreciated at the time you went and sold it. So if you buy it cash off the lot, you're gonna keep more value because you paid for it cash. So let's say they give you 27. You can take 10,000 and go buy your car for 10,000, and you still have a car. You can have that car to go look for a job, and you can take in the remaining 17 and just keep making payments on that loan, knocking it down and keeping your payments in good standards and keeping your credit up as you look for another job. Then once you get another job, then you'll be able to keep paying that loan. Plus, you'll still have the 17,000, which you can use to invest in a business or invest in real estate to even make even more money. Or you can still use that money and invest in your own business if you don't find a job soon enough, you can take the $17,000 and invest in your own business, create some income for yourself, and then you can still use that to pay the loan back. So regardless of the situation you do, you have many options if you get a personal loan or a personal line of credit and buy your car that way, versus if you just get a car loan. If you just get a car loan, if you lose your job or anything and you can't pay that loan, that car loan, you're gonna get repossessed. They're gonna take your car, and you ain't gonna have a way to even get around to find another job. So just think about that. That's a way better option than getting an actual car note. And you can do the same thing and just get a personal loan and just buy your car cash. You have many other options just in case something go wrong. Now the whole ultimate goal is to keep your credit good and not to default. But if you did default on your loan, at least they ain't taking your car, and you can go and look for another job and not keep getting repossessions on your car, on your credit. I mean, not getting the repossession on your credit, hurting your credit score a lot. So thank you for watching the video. Comment, subscribe, like, let me know what you think.